Hey everyone, this is the Trader Investor. Let's take a look at the broader markets. The broader markets overnight, ES had very small move, and when we have small moves, I'm not too excited about the open. It doesn't tell me, oh, we're going to have a very strong open. So if we take a quick look at the ES, where it closed last week Friday, and where it was up, it was not that significant. 4,274 to 4,279, right? So about a $5 move doesn't really excite me that much, and that's why when we have an open, a gap up open today, I just wait patiently. Why do I wait patiently? Because first 50 minutes is where price is going to settle down, and we just take a look at that. And what is it that's happening? Price has opened higher, but it really pushed down fast to the downside, and it is stopping at Friday's 15-minute range high. We don't know yet what it wants to do. If price breaks above this line, we have a lot of distance to cover, depending on where the rest of the market is heading. If price breaks down below here, is it trying to close this imbalance, or is it trying to close this imbalance? There's a couple of gaps left open. A lot of times price likes to go close those gaps. So in SPY, what appears to be a strong open is starting to be weak immediately. It's not the same for the Qs. The Qs strong open and continuing to push up. So technology is really doing well today, continuing to push up, and let us see where we're heading. Right? Let us see where we're heading to just be able to take a look at that. Let's zoom out, and we can see we just keep making higher and higher. New highs, continuing to make that and continuing to push. Now our leading indicator IWM did not open up, did not gap up. It actually opened slightly above Friday's close, but now it is showing some real weakness. It is showing some real weakness, and as price keeps driving down, we want to see, okay, once we close here, do we test it and come back down to these areas, where is it that we want to come down to? This low of Thursday is pretty much similar to the 15-minute range low. So is that what we're testing? And as my leading indicator, the IWM, if IWM is weak, I'm not going to rush to enter a call position in SPY. Sometimes they move in reverse, but if IWM is showing some weakness, I'm going to be biased to the downside. SPY has been extended. SPY has been extended. If we look at the hourly chart, it's been making new highs, but extended. And you know, if you put any kind of oscillator, if your oscillator starts to flatten out, or it's making lower high while price is making higher high, it's a sign of some weakness, and that weakness could be leading us to close these gaps maybe over the weekend. So this is how I'm looking at the broader market, right? And if you look at the diamonds in the 15 minutes chart, again, diamonds actually opened even lower than Friday and continuing that price pushing down. So coming back to the SPYs, it pushed down, and it's trying to trick us and say, hey, maybe I might want to reverse, but I'm not seeing some strengths that shows we are reversing yet. I'm not seeing some strengths in IWM to see we are reversing. I want to see close above VWAP and continue price moving up for us to say, yeah, it was just a short-term pullback for a good entry. We're not seeing that yet. So this is how the broader markets are setting up, and let's just be patient and see where it wants to give us. If there's no dollar play for me from here to here, by dollar play I mean we stopped at the 50-minute range high. Can we go to the mid and reverse here so we can target a dollar move? Can we clear the low, reverse a little bit and target a dollar move? That's what we want to see. This dollar move is closing this imbalance, and closing by imbalance, I mean, for me, it's coming to the middle and potentially reversing. That's what I mean by closing the imbalance. It doesn't have to go all the way down to close that imbalance. And if we draw a Fibonacci retracement from a significant swing low to high, then we can see that price has actually blown through 50%, 61.8%, 70%, and is now trying to work on the 78.6% retracement. If you want to draw that to Friday's low, then we're playing around the 61.8 retracement, and you can keep going lower and lower and see that depending on how you draw it, depending on what chart you are looking at, you might say, okay, now we're playing around the 38.2% retracement. Again, this Fibonacci retracement, it's an art by itself. I like to at least see what is happening 2 days in a row, and I would also like to see between the low of the last hourly bar to the high of the current hourly bar, what kind of retracements we're making. Now what that is going to help us is we can target this area, the 27.2%, the 127.2%, and the 161.8% extensions as a target area for price to then reverse. So we're playing around that area. It's possible that price is going to continue to push back down and reverse. Again, we don't trade what we want, we trade what we see. Price could continue to push down, right? So unless we see a significant candlestick pattern, maybe on the 15 minutes, and if you're trading lower, maybe on the lower time frame, unless you see a significant reversal meaning price has gone down, and it is showing you a break of structure, right? Break of structure. Unless you see break of structure, some high is broken, lows remain higher, and then highs broken, lows remain higher, then that's a break of structure that we can follow to say this is terminated and we're going back the other direction, right? So when we see that, then we can target the 50% retracement. Until we see something like that, there is no entry yet. At least for me, when I'm looking at the smallest time frame, 15 minutes, I don't want to baby anything smaller than that. Alright everyone, this is how I'm looking at the markets for now. Let us be patient and find our good entries. And I'll see you in the next video, depending on how the markets close. Take care for now.